All right, good evening, everyone. Welcome to week 6 of managerial accounting. I realize this video is coming a little bit late in the week. Fortunately, this week's assignments are a little easier than what we've seen throughout the last 6 weeks. I want to go ahead and just kind of walk through all of it and set everybody up for success as we submit our assignments for Sunday. The first assignment, 6A, what they're asking for is decision-making process on determining mix. The scenario that it's providing us is protein bars versus trail mix. You're getting the sales price, the variable cost, the contribution margin, which is the sale price less the variable cost, and the amount of machine hours it would take to make each product. With this information, including the demand information down here, we're supposed to decide what's the maximum optimal mix to manufacture between protein bars and trail mix. Now, many of you might think if the sales price for trail mix is higher, then surely that would make it the ideal candidate because you can sell it for a higher price. But there are other factors that you should take into account to really ensure that you're determining the best mix. One of the things that I would recommend everyone do is divide the contribution margin for each item by the sale price. This gives you a total percent contribution margin compared to sales price. Contribution margin is the amount of money you're going to make on every unit that you sell. The higher percentage of contribution margin, the more ideal that product is to manufacture. So for protein bars, you would take the $1.50 divided by the $2 sale price. For trail mix, you would take the $3.50 divided by the $5.50 in sale price. You'd get a percent contribution margin for each item. My recommendation to you would be that the item that has the higher percentage of contribution margin should be what you maximize in manufacturing that week. Now, there are some constraints. One of the things that they're telling you in row 11 is that there's 40 hours of machine time available per week. That's it. They're also giving you maximum demand. So the maximum demand for protein bars is 150 bars per week, and the maximum demand for trail mix is 50 bags per week. So if you were to make 150 protein bars at 0.2 hours per bar, how much would that be in total hours? I would also calculate that for trail mix. Once you've selected whether you're going to move with either protein bars or trail mix based on the percent contribution margin, then I would maximize the demand for that product and determine how much machine time is going to take to manufacture the maximum available demand. If you have anything left, less the 40-hour available, then I would factor in the second product. So here's a table that we talk about a little bit on how to set this up. The optimal mix, you would put exactly how many protein bars and how much trail mix. The machine hours required would be the total number of machine hours when you maximize the available demand provided up here times the machine hours it takes to make each product. The contribution margin is going to be the total sales price of the total demand less the variable cost, gives you the contribution margin. Moving on to 6B. 6B is a understanding of net present value, internal rates of return, and accounting rates of return. So here what we're trying to calculate is exactly what is the net present value for the frozen desserts, as well as for the frozen dinners, and the IRRs for each. Here you're going to see the initial cost of equipment. This should always be factored in as a negative number. for frozen desserts as well. It would also be factored in as a negative number. The expected cash flows are positive numbers. You want to calculate the net present value for each of those anticipated cash flows. Remember that there is a formula in Excel that will allow you to do that, and it's the present value, or PV formula. There's also tables that are available to calculate net present value on the internet or a table in the text. Once you've calculated the total net present value for each of the anticipated cash flows, that should be positive, less the negative of net present value, you get the time it would take for the payback period. So for your first question, they're going to ask, if you have an initial cost of equipment of $500,000, how many years will it take before you recover that $500,000? Calculating net present value into the total. Same with frozen desserts. If your initial investment is a negative $350,000, how many years would it take before you recover the initial investment? The accounting rate of return. This is going to be calculated at the average of the cash flows divided by the payback period. Net present value will be the net number of the negative initial cost of equipment and positive expected cash flows for each year. When you sum those together, you'll get the net present value for both cash outflow and cash inflow for frozen desserts and frozen dinners. The internal rate of return is going to be the internal rates of return from year 1 through year 5. Excel does also offer a formula. It's equals IRR for the sum of those years. That will allow Excel to calculate those internal rate of returns automatically. You would do this for frozen dinners as well as for frozen desserts. Once you've analyzed the product that's going to give you the higher rate of internal rate of return, the higher accounting rate of return, and the quicker payback period, it'll help you make a better decision. For this particular exercise, you can see that frozen desserts is the better investment. It'll have the shorter payback period and the greater accounting rate of return and internal rate of return. Your job's going to be to fill in these numbers here in cells 26 through 29 for each item. So with that, it concludes kind of the overview of both exercises. I hope that with these two videos and in conjunction with the extra credit assignment, you're able to finish managerial accounting with the strongest possible grade and move forward onto your remaining classes. I thank you all for your commitment, your dedication, your willingness not to give up and hang in there through one of the business courses, one of the business acumen's most critical courses and probably one of your most challenging. I hope that the topics you've learned throughout the last 6 weeks have helped set you up for success and gives you a better understanding of accounting in general and some of the equations and the calculations managers are using to be more effective in the marketplace. Thank you and have a great weekend. I look forward to hearing from you via email or phone if you need to reach me. Good night.